Hi everyone, Neja here, and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. Let's dive in. Hey guys, welcome to another episode of Stock Break. Today we will talk about Airbnb, so let's get started. Just a quick reminder before we start, this presentation is for educational purposes only. It should not be taken as investment advice or recommendation to buy or sell any financial instruments. Now we can dive in. If we take a look at Airbnb official website, Airbnb was founded in 2007, and since then it has grown from a startup to global hospitality giant. It is operating in over 220 different countries, and it is connecting hosts that are offering stays with guests that are looking for accommodation and activities. Now we will take a look at their stock price chart on Guru Focus. The company went public in December 2020 at $68 per share. On the first day of trading, it closed at $144 per share, more than doubling its IPO price. However, they faced some challenges along the way, like COVID pandemic, which caused fewer bookings, and that was also reflected in their stock price. But they adapted quickly by focusing more on local stays and longer rentals, which helped at stabilizing their business and was also reflected in their financials. To analyze Airbnb's recent performance, we can take a look at their recent earnings report that they posted for the first quarter of 2024. They reported a revenue of $2.14 billion. It increased by 18% since last year, and this growth was primarily driven by continued strength in travel demand and the timing of Easter. They also reported a record net income of $264 million and a free cash flow of $1.9 billion. If we put these numbers in bigger perspective and take a look at data for Airbnb for the past 5 years, we can see that their revenue grew annually by 22% and their net income has grown significantly from a loss of $17 million in 2018 to $4.8 billion by the end of 2023. If we want to understand how Airbnb makes money, we have to know their business. Airbnb revenue streams are primarily driven by accommodation bookings. In the first quarter this year, they reported almost 133 million nights and experiences booked. Nights and experiences booked is one of the key metrics for Airbnb because it directly reflects platform's usage and popularity. Another sector-specific metric is gross booking value. It shows us the total value of all bookings, including taxes, host earnings, and fees. It's important because it reflects platform's transaction volume and economic activity. In the first quarter, Airbnb reported gross booking value of almost $23 billion, reflecting a year-on-year growth of 12%. Airbnb profitability metrics have shown significant improvement in recent years. If we first take a look at the gross margin has improved from 74% to 82% in 2023. Similarly, net margin has undergone a remarkable turnaround. It has improved from negative 135% to positive 48%. This dip that we can see in 2021 can be majorly attributed to COVID-related travel restrictions. Overall, the trends show that Airbnb has been managing their costs well while still growing their revenue, and all of that positively impacted their profitability. Now let's take a look at potential valuation. Guru Focus Tracker ranks Airbnb as modestly undervalued, and their P/E ratio of 19 also suggests potential undervaluation, especially when compared to other fast-growing tech companies. However, there might be a reason for that. Risks such as high competition on the market and government restrictions like those that have been recently imposed in Portugal due to rising housing prices for residents add to additional uncertainty. That is why I would like to remind you in the end to always evaluate risks and opportunities when evaluating if stock is really undervalued or not at current levels. I hope you enjoyed the episode. Like and share it with your friends if you found it interesting, and let me know which company would you like to see next.